Hey, Tim Lento here. I wanted to go ahead and review my trades for January 2018. Let's dive right into it. So for January 2018, I only had 3 trades for that month and actually ended up losing $1,330. So losing month, I hadn't had a losing month in over a couple of years. So, it was a wake-up call to really get back to what I was doing before. I kind of strayed away from my normal strategy and it cost me. So let's look at the first trade. GOPH was my first closed trade in January. Actually made 1800. So basically this is a long running promotion and Timothy Sykes was actually long overnight, and since I know that Tim likes to sell right at the open, I started shorting at the market open and got a nice drop. So let's take a look at GOPH's promotional um, website that they've been using. So here it is, Capital Equity Review, saying how great the company is again, blah, blah, blah. You know how it is. If you watched any of my other videos, you can go into it and see that they're just saying how great the company is. But really what we want to look for is the disclaimer at the bottom, because there's a reason that they make these web pages and send out emails and things like that. So if we look at disclaimer, you can see they even have it in bold for this one. Beginning October 2017, they started disseminating stuff about GOPH on a website and email, and they have been compensated $630,000. So if you go ahead and look at the trade here for this one, GOPH, basically what happened was the stock was gapping up, and then when Tim sold, it got a nice drop. So if we look at GOPH, we can see it had a nice run up, then it crashed, and Tim bought on 117 because, as you can see, it's turned around and it was having an up day, so he was looking for a bounce. 117, you got a nice bounce. Then 118, it opened a little bit higher, and then Tim sold, and then of course the stock panicked and I was short. So it went from a high of 207 to a low of 155. I took the short at 204 and I covered at 172. Here's an intraday, so it gapped up and then it faded below 2 and then it had a nice panic down at even 160. So that was a pretty nice trade. Next trade I was in was POTN. This was my big loser. I did the same thing. Tim bought it at the end of the day. I knew it was kind of like a shady looking company, so I shorted and expected a pullback. So Tim bought toward the end of the day here. It was a nice purchase. I mean, it just broke over 30 cents and was running into the close. So I was shorting it in here. And then the next day, I could have actually got out at 30 cents and made a nice profit, but I just missed the exit. I wasn't, watching it. And then the next few days, it proceeded to run up. And I'm shorting more into this run up to 60 cents. It got a nice drop here. Again, I didn't take it off. And then the next day it started going back up. So at this point, I'm like, okay, if it goes above 60, that's it. I got to get out. I can't keep risking this. So it did break out on that Thursday, and it kept running. It actually kept running up to, I believe, $1. Yeah, so this was the down day, and then it started moving back up to 60, and when it broke 60, I got out, and it went all the way up to 75. The next day it went up to probably around 95. The day after that, it gapped down, and that's when I started shorting it for my third trade, which was here. So on the trade where I lost 6,600, I shorted at 37, it went down to 30, I didn't take the profit, and then again when it broke past that 60 that seemed like it could be the high, that's when I got out and took my loss. And then after that I waited and watched it, and I watched it go all the way to 95. I saw the gap down from probably 85 to about 82, and I started shorting into this little pop because I figured it would sell off, and that's exactly what happened. So I was shorting at 82, and then it got the nice drop. I covered at 59 for $3,400 profit. And here is that chart. So you got the gap down, it went up for a few minutes, closer to 85, then you had a nice panic. Went sideways till about 10:30, and then it started dropping, and I was covering into this move down here. So that was a pretty good recovery. Obviously, I shouldn't have, stayed in the trade for so long. That cost me 6,600. But I would kind of went away from my strategy of sticking with the promoted penny stocks, even though POTN looked kind of, shady. If you look at POTN now, um, it's faded all the way back to the 30s. So it went up. It went from 7 cents all the way to 95, and they've just been saying how good their revenues are. Every few days they were putting out press releases about how great their revenues were. But just because you have increasing revenues doesn't mean you have profits. So to me, it seemed like they were trying to basically get the stock up, and then it did eventually come back down. Of course, I didn't want to risk, sitting in there for 30 cents and then watching it go all the way to 90. That would have been very painful. So I did cut my loss at 60 here when it broke above the candle on 123. Obviously, I should have just cut it earlier and then reassessed it later, but I didn't. I wrote it, and that cost me a month. So that was it for January. I was in the hole for 1,300. Not terrible, but it is a losing month. But after January, I got back to my usual um, strategy, and I've been doing pretty good since then. So if you like this video, please like and subscribe. Check out timothysykes.com. Check out promotionstocksecrets.com if you're interested in this type of strategy. If there's anything else I can help, if there's any questions, please leave a comment, and I can do a video on that stuff as well. And I hope we catch you in the next video. Thanks for watching.